Welcome back to Explain the Charts. Today, we're taking a deep dive into USDJPY, analyzing both the recent news and the chart data to help you make informed trading decisions. We'll cover everything from potential rate cuts to key support and resistance levels. Let's get started. First, let's quickly go over the news. Recent news suggests the USDJPY dropped sharply after speculation of rate cuts, while Japan's exports fell in May and the Bank of Japan is expected to hold rates steady. Tensions in the Middle East could also be a factor. Let's analyze the charts now. Looking at the daily chart, we can see a period of significant volatility followed by recent consolidation. From February 2025 through about May, we saw significant upside movement, reaching a peak near 162, followed by a decline. The pair is currently trading around 144.68. Now, focusing on a more recent time frame, let's zoom into the daily chart from the beginning of March through the current date in June. We see more clearly this downward trend and the recent consolidation around the 144 level. The recent candles suggest a potential support level forming around 142 to 143, while resistance could be around the 146 level. Let's switch to the 1-hour chart to get a clearer picture of intraday movements. On the 1-hour chart, we observe choppy price action with no clear trend emerging. The price seems to be fluctuating between 143 and 145, suggesting a consolidation phase. We can look at the 15-minute chart to get even more granular. We can see from the 15-minute chart that while it did reach a high of 144.9 before, it's still mainly trading sideways, between 144.00 and 144.30. The current hourly candle is also red, indicating some downside momentum. Considering both the news and the charts, let's formulate some predictions. If the Federal Reserve signals further rate cuts, we could see continued downward pressure on USDJPY, potentially testing the 142 support level. Conversely, any hawkish comments from the Fed or signs of improvement in the U.S. economy could strengthen the dollar, pushing USDJPY towards the 146 resistance. However, for now, I think the current range-bound price action is the most likely outcome. A break below 142, which is fairly unlikely in my opinion, would suggest a stronger bearish sentiment. A break above 146, while more likely, needs confirmation from strong U.S. economic data. Remember, managing risk is key. Always use stop-loss orders and trade responsibly. That's all for today's analysis on Explain the Charts. Thanks for watching.